Happy Friday, traders. It's 8:02 a.m. Chicago time, 9:02 a.m. Eastern on Nonfarm payroll slash unemployment Friday, the 10th of March, 2017. Thanks for joining me for another Trader Bite. Want to remind everyone it is like Friday. I would really appreciate it if you could find the like button on your YouTube stream and hit the like button at some point during the broadcast and before you leave. That helps in the long run. So with that out of the way, I want to say derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So I'm sure you all know that we got the non-farm payrolls report this morning, and unemployment. This is the second major um, um, release of the month. The non-farm payrolls came in at 235,000, beating the 200,000 expected. Change in private payrolls at 227,000 versus 215. Manufacturing payrolls only added 9,000. The prior, or the estimated, was 10,000, so it came up short there. The birth death adjustment was 124 versus negative 247,000. The unemployment rate is 4.7%, in line with expectations. Other than that, this morning the UK released some numbers. Industrial production came in slightly better. Visible trade balance came in slightly better. The markets overall are strong, came in strong this morning, even before the non-farm payrolls release. Crude oil pushing higher after the massive move down from balance that I covered yesterday in yesterday's Trader Bite. Crude oil has a bit of a gap up this morning, trading within yesterday's range though, and that's the leader for today, followed by the Russell, Euro stocks, the S&P, the DAX, and so on. The laggards, the worst of them is the U.S. dollar, trading June 2017 at 101.335, followed by the Japanese yen and then the Bund. The U.S. Treasury bond is teetering. Well, actually, it's up about, what is that, 5 ticks? Up about 5 ticks. Some interesting trading in the 10-year today. The movement for the non-farm payrolls occurred in the 10-year more so than the indices, which is uncommon in the course of normal business. As far as what we're expecting today, 1 o'clock Baker Hughes rig count, 2 o'clock Eastern is the U.S. monthly budget statement, expecting negative 187.5 thousand. Wow. And then that's it. That ends our second week of March. I want to remind everyone, of course, early on, it is Friday. It is non-farm payrolls Friday, so it is a good day to be conservative with your risk and to monitor and be um, conscious of your emotions, so just emotional awareness, and not getting sucked into bad trades and then wanting to fight the market for the rest of the day. It just isn't. It doesn't pay to do that. Um, Other than that, let's move on to what was expected yesterday. Here we go. Yesterday's expectations. Come on, screen. There you go. Yesterday's expectations, yet again, we come in and the primary hypothesis does not play out. The primary hypothesis was sideways to open. I changed the color. What's up here? Boom. Primary hypothesis is to go sideways, then for it to pop up, and then later to turn over and just hold in range. Secondary hypothesis, which is again what worked, is a push higher. Was looking for the 67 area for resistance up here, and then I was looking for a lower high. I was looking for an impulse down, and then for a pullback, impulse down again, and then for the market to finish back into balance. Expected the market to finish somewhere around the 2363 area yesterday. So here's what we actually got. This is it. So we get the initial push up, we get the push down, okay? We get the try again. This is a lower high, looking for an impulse. There's your impulse. The impulse here was bigger than expected. I expected this to hold around the 55 area, push through by about 4 points. uh, push through by 4 points. And then what do we get? We get the push, pull, higher, low. And then where do we finish? Bada bing, bada boom, 2363 area. Okay. And so what this is it's it's an exhaustion move to the downside. The market has pushed into the prior days, or the prior balance has finished near the highs, and in the overnight session across Asia and Europe was strong all around. So this is pushing us to open way up here back into the old gap zone, which will be removed here soon as we cross it. And we're trading at 2373 based on non-farm payrolls. Now, excuse me, hang on. Just as a side note, this non-farm payrolls release, man, it has become just absolutely useless to trade this thing. Here's the non-farm payrolls occurred right here at 7:30 Central. I'm in Chicago, so I'm on exchange time or Central time. Right after the number, there's the long, strong number, and just took forever. I mean, from the entry at what is this at 73 quarter, the high is 74 half, 5 ticks, and then we get the pullback hold, and then it pushes. But uh, the scale out here takes us to 2375, which isn't much from 73. It's 8 ticks. It's 7 ticks from the average, and it took 7 minutes for that to happen. Uh, 7, 8 ticks in 7 minutes on non-farm payrolls is incredibly slow. And then the rest of the time, you can see here, nothing. The market's just really, really, really quiet. Volatility still way, way down, and it's really tough to pull. Um, it's really tough to pull something out of the market, even on these large releases. That doesn't mean we can't do something with the market, but it does say that there isn't much participation in there. The order flow, as you saw on that screen, was I didn't see size moving in, size moving out. I didn't see pushing by either direction. It's just allowed to float there. So pretty easy to get frustrated in this market. Just to, again, be self-aware, be aware of your, be emotionally aware, because emotional intelligence is a big part of the game. Here's what we've done overnight. Let me switch back to the 15-minute. I had it on 1 just because I had to use the overnight session to monitor what the trade was doing. Here's what we have. We're pulling back into this box here, into the structure right now. And overall, we didn't accomplish very much overnight. We did push off of the open. As I said, the Asian session was very strong. The Asian markets were, when we look at the Hang Seng, it's up 28 basis points. The yen US dollar up 30 basis points, and so on. And Europe was strong too. So overall, we just moved with them and then sat sideways, and then we had a little pop into Europe right here. The European Open is right there, and then it's just sideways waiting for non-farm payrolls, push higher, and then now we're pulling back to this structure that we had below, this kind of extended zipper structure. This is a 15-minute chart, and we're holding in place here. Above us, let's look at the bigger picture. So what have we accomplished here? Look at where we are. So the 55 comes from right here. This 55 is value low of this completely balanced profile. So let me bring that to the front. Here's what we did. From the 21st to the 28th, we were completely imbalanced in this incredibly balanced profile. Look at this micro composite, just like out of a statistics book when it comes to histograms. So the value area low is valid. with 23.55, and that was the target yesterday. Remember, I put down 23.55. Sorry. I put down 23.55 as the potential low, pushed to 51, tested below it, took out this last low, and then buyers came in strong. This was a clear rejection of the low on a bigger time frame. And then what we have today is a break of the one time framing down. No matter what this morning on the day, we will have a break of this channel that's been formed here. And this channel's had small, small areas of pullbacks, but overall, it's been a very consistent drop, pullback. And then this is another pullback, and now we're breaking. So I'm expecting this to reverse back a little bit this morning, hold steady, and then keep pushing up. Remember, the gaps up have generally not closed the gap zone on the next session. They kept the gap zone open, and yesterday's high is around 23.66 and a quarter, and that'll be the base for today. So that's what we've got. We've basically moved from the balance that was up here to the balance that was down here, and then we're moving back into the balance that's up here. The key price, the key target of the day is 78. 78 is the key price. That is the MC point of control, or the most traded price in this area up here. The low volume node is way above at 23.90. And that's likely to be the next target come Monday, Tuesday, probably Tuesday of next week. Monday after the non-farm payroll is generally pretty dead. So what do we have for our hypotheses? It's 8:14. I have 1 minute. For this morning, I'm expecting an open auction, an attempt lower, but for buyers to step back in and start taking this to 78. Pull back to 78 and then hold steady. I'm expecting a tight range, so probably nine points at best is what I would think. I would expect it to leave a gap zone behind here from 66 to some point above 66 to about 69 or so. So 69 would probably be a pretty good guess for a low, and it's just a guess. And then I'm looking for an initial test of 78, pull back to the opening swing, and then look for a base to push higher, and then likely to fail back into the close. Okay, this may be starting our next leg to new highs at 24.01 or something like that. Actually, in this contract, it's 23.98 as you see on your screen, so 2400 becomes the century figure for this contract. Second hypothesis is an open test drive that takes us above 78 early and then completely sideways. Again, any push down into the gap zone is likely to be bought. So this second hypothesis, look for an OTD open, an open test drive. Open tests to see if there are any real sellers here. Once we see there are no real sellers, I'm looking for a drive. You do not want to fade or go short under this circumstance. It's likely to blow through whatever day prices we have. It means that the higher time frame is operating in here, and they don't care about the day time frames. They're looking at a much bigger time frame. The third hypothesis is an open push up to 78, fail back through, and then start moving towards balance again. And then for that, we're looking at 61.50 as the target. This is hypo 3. This is a low probability. This has not worked out in the last few attempts higher. But here we're looking for it to fail back through. And how do I know? I know that this is likely to fail through once we pull down, put a low in, and then take that low out. If we put a low in and start taking that low out in the gap zone, I'm looking for hypo 3. I'm looking for sell spots, some size on the offer and the order flow to trade against, and then look for it to push through into that point of control. Okay, and then that puts us back into the balance from way back here. So that's how things are shaping up today. Again, it is Friday. You do not want to stake too much of your account on a day like today. It not only hurts you financially, but it does destroy a good amount of your emotional capital, and it makes it very hard to trade next week. You know, when you lose control one day, it takes a few days to recover that. Trust me, I've been through it many times. Just be smart and just pick your spots. It is a time to be patient. It is not a day trader's cycle. It is an investor's cycle. So sit tight, chill, and then just look for your spots. Be very deliberate about what you're doing on a day-to-day basis. Good luck, and I'll catch you on Monday. Take care.